What did you call that initial session?
Call it an initial strategy session. The whole idea is to be proactive and do like a mini education in the sales tax, use tax, going through and looking at the business, performing a mini audit. Our clients are privy to a lot of things that they need to know. The problem is a lot of people, they'll just go out to a tax advisor and just get a tax return done. So they miss out on all the consulting elements. And a lot of CPAs aren't really necessarily set up for those services because maybe they just focused on tax returns. They're not really geared towards being an advisor to a small business owner. So that's one of the points that separates us. And the overall majority of our new clients are startups. And we typically define a startup as someone that's been in business for less than 2 years.
Oh, okay. I was thinking of a startup as they're not even in business yet, but they want to start.
Yeah, we call those pre-startups.
Okay.
So actually, they fall into 4 different categories. The first example is, let's just say it's one person, they want to start a new business. They're selling beer mugs on Amazon, for example, or it's a brand new business. He sells a product called a man mug. So it's a beer mug he sells on Amazon, and he targets frat houses, beer connoisseurs. So it's like this aluminum mug that keeps your beer cold. He's kind of an example. So he's got a full-time job, and he does this on the side, and he sells primarily on Amazon through Fulfillment by Amazon. The business is called 7 After 9. Manmug.com is his website. Just kind of bootstrapping it, trying to get everything going, and he came to us. I think it's already been in operation for about a year, and so now it's the second year. It's kind of slow go when you're doing something like that part-time. So that's kind of one type of startup.
Let's just characterize that. So that is a part-time person, solopreneur.
Yeah, solopreneur.
He's been in business for a little while, and he's in the kind of early growth phase.
Mm-hmm. The next example would be an investor-backed startup. So this client, the website is called mantelmount.com, M-A-N-T-E-L mount.com. They're primarily e-commerce as well. One of the founders developed this way to kind of hang your flat screen TV above your fireplace, and so you can pull the TV off the wall and you can twist it around, and because a lot of people, they have their TV mounted on the fireplace, it's kind of hard to view it right. So this kind of has like a swing arm you can take out, and they've done very well. It's a situation of three partners coming together, and the investor, a couple of investors, and then the inventor. They hired a CEO to run the company. They hired us to handle the accounting and the taxes. So that would be a second type of company. And they're hitting the road faster because they actually have some investment behind them, and I'd say their product's a little bit more unique too. A third example would be a biotech client. They have private funding, but they've raised $10 million. You have another one that's a venture-backed company, and they've raised like $20 million.
When you describe a biotech company, can you just characterize what that is a little bit more?
This specific company is doing cancer research. They're not going to do the manufacturing part, but they develop the intellectual property, and then they make a deal with like a large pharmaceutical company.
Right.
A large pharmaceutical company manufactures it, and they're hoping to do an IPO. I mean, they're kind of rare and a little bit stressful. This one that's that big.
When you say it's big and it's stressful, what's big and why would it be stressful?
The size of the company, so they do $8 million a year in expense. They're going to have some revenue this year, but they're C Corp, they've got stock option plans. There's just a lot of different complexities to the business, kind of the nature of what they're doing. It's not that bad, but it's still, you start getting into more technical areas, right? Just making sure that they're doing proper compliance. Stock options is probably a big part of that, making sure that that's done correctly. Do they have a cap table updated? When you have big numbers, are they providing you with all the information, so, so there's more things going on when they're a larger company for sure.
So when you say more stressful, what that really means is that there's more money involved, there's more at stake, and it's much more complex.
Yeah.
Why are you describing them as a startup?
They came to us as a startup. We first started working with them. They were brand new, so they had some investment. Pretty much started with them from day one. So I think they're in year 3 now, but they were a startup. That's just an example of one. Okay. Probably another one might be somebody, like an employee that's out there working for somebody, and they think they can do it better, right? So they go and they start their own.
Don't all employees think they can do it better?
Yeah, exactly. we have a client that used to work for Stone Brewing, and he went off and started his own brewery. And he was a marketing guy for Stone, and he went and got $1 million of investment and started his own brewery. Now he's doing really well.
Interesting.
That's kind of not the typical thing. Typical might be, where someone's maybe a salesperson for somebody, right, and they have some sort of service, and then they go off and do the same thing, and they can kind of have a book of business running fairly quickly. Those are usually easier ones, right? Or somebody's already been in the business before, and they're shutting down an old company. Maybe it was a partnership gone bad. They're starting up a new business on their own or with somebody else. Again, those things get up and running fairly quickly, right? Because there's a track record. Some of the ones that are more tough are just when people start from zero and maybe they're brand new to an industry. They don't have a lot of money, right? So it's going to be a slow go.
What would you say, in general, are the specific challenges that startups have as against other types of companies?